Hello, everybody. You're with Echelon's Reboot Everything Festival. Now, in 2005, the Romanian government established a closed-ended investment fund called Fondul Proprietatea to take over the assets of Romania's state-owned enterprises, many of which had been expropriated from their previous owners during Romania's past tryst with communism, with the objective of maximizing shareholder returns of these assets. 5 years after the establishment of the fund, Franklin Templeton, a New York-based investment company, won the mandate to manage the fund. The fund was subsequently listed in the Bucharest Stock Exchange, and in 2015, it was listed in the London Stock Exchange. Joining us online is Marius Dan, who is Deputy Chief Executive of Fondul Proprietatea. Marius is part of Franklin Templeton, who managed the fund on behalf of the Romanian government and its shareholders. Marius, thank you very much for joining us.
Yes, and hi Shamindra. Thank you for having me.
Now, when we think of state-owned enterprise reform here in Sri Lanka, we are thinking of one of two alternatives. One being independent management for better governance, and the second alternative being privatization. Now, does Fondul Proprietatea's experience in Romania suggest there is a third way?
I certainly believe so, because the structure that has been created by the Romanian government back in 2005 as a way to compensate Romanian individuals that had their properties confiscated by the communist regime is certainly a model that can be replicated in Sri Lanka. It is a model that we are discussing with a number of other countries to implement. And what exactly is it? It is a closed-end fund structure in which the Romanian government injected minority and majority stakes into both privately owned as well as state-owned enterprises, where the government either had 100% of the ownership or a minority ownership, and they carved out a portion of that and injected into Fondul Proprietatea. And then we, as Franklin Templeton, were hired in 2010 to manage the structure, to list it on the stock exchange, and to create value for the shareholders. So we certainly believe this is a very interesting and a proven model that can work in Sri Lanka, in a number of countries, because it does not force the government to sell assets right away. Romania was going back in 2009, 2010. It was managing the effects of the global financial crisis. And if back then the Romanian government would have been forced to privatize and sell off a number of interesting assets, especially in the energy sector, where we have the majority of our ownership in Fondul Proprietatea, it would have missed out on a significant amount of dividends that have been paid by the state-owned companies in the last 10 years as a result of the restructuring that we've brought into all these state-owned companies, the increase in profitability, the increase in efficiency. And those dividends have been used to fund, various projects from the Romanian government, ranging from infrastructure investments to right now subsidies to reduce the impact and the effects of the current high energy prices that we're seeing in Europe and across the world, actually. So we certainly believe that there's a lot of value in creating the structure, in listing it on the stock exchange to allow the government to raise a certain amount of money whilst maintaining the majority ownership in this state-owned enterprises.
Just to back up a little bit, Marius here. So the Romanian government created Fondul Proprietatea to vest in it state-owned enterprise assets. It did this in what year, Marius?
This happened in 2005 when the structure was created. And we at Franklin Templeton...
And how did you and Templeton get involved in this?
We got involved as a result of an international selection process for a professional asset management firm to manage Fondul Proprietatea. So we participated in the selection process alongside 25, 30 other global asset managers. And we won the mandate in 2009. And then we were appointed officially in September 2010. We listed the fund on the Bucharest Stock Exchange in January 2011, and in April 2015 on the London Stock Exchange as a way to broaden the investor base into the fund, but most importantly to attract more institutional investors in Romania. And actually, very interestingly, Fondul Proprietatea represents the largest foreign direct investment in the last 30 years, because we've attracted around $1.7 billion in portfolio investments in the fund's shares. So that is the largest single FDI in Romania.
Again, if I can ask you a couple of questions with regard to background. When Fondul Proprietatea was set up in 2005, what were the book values of the assets, and how many companies did the government put in there, and what's happened to these values in the time since its creation and in the time since Templeton took over its management in 2010?
Sure. When the assets were injected into the fund, the government considered that the value of these assets was around $4 billion. They thought, the Romanian government thought, this was large enough for the purpose of setting up the fund, compensating those who had lost property during the communist regime. And because the government didn't have the money to compensate these individuals or give them the properties back in kind, the structure was set up and they received shares into the fund. Since then, and the number of companies that was injected was around 90.
Oh, as many?
Yes. A lot of small companies. For instance, the fund has always been very top heavy. The top 10 companies in the portfolio account for around 85-90% of the net asset value of the fund. So very concentrated at the top. And we had a lot of small assets, which in the process we've sold, we've merged, we found ways to create value for the fund shareholders. Right now, so fast forward 12 years later since we took over the mandate, we have around 30 companies left in the portfolio, and the largest asset in the fund is the country's hydropower producer. It represents 70% of the net asset value.
Sure.
So what's happened with the value of these assets over time? As a result of our efforts going and being very involved in all the portfolio companies at the board level, interacting with the management of all these companies, interacting with the majority shareholders, which in a lot of cases is the Romanian government through various ministries, Ministry of Energy, Ministry of Communication, Ministry of Transportation, Ministry of Economy. We've been able to streamline the operations of most of the companies in the portfolio to make them more efficient, more profitable. And the value of the fund today is around $3.5 billion.
Have you disposed of any companies?
Yes, we've disposed of around 60 companies in the portfolio.
Would you have a rough value for the amount you've generated?
So we've distributed to our shareholders, to the fund shareholders, which are mostly Romanians. We have 20% of the fund retail investors from Romania. We have another 40% the Romanian pension funds, which have grown tremendously over time, and the rest is foreign institutional investors and foreign retail investors. We've distributed $4.2 billion through dividends, cash dividends, through stock buybacks, and through tender offers.
Sure.
So the value of all the disposals that we've made is around $2.2 billion. And then another $2 billion is dividends that we've received from all these state-owned companies. 10 years ago, when we started managing the fund, the value of the dividends that these companies, especially the state-owned companies, were paying was close to zero. Today, the largest asset in the portfolio pays over $1.5 billion annually in dividends. And that, 20% of that comes to us, and 80% goes to the Romanian government. And that is the case with a lot of other assets that were owned by the fund, listed on the stock exchange or sold, but where the Romanian government still retains a majority stake and receives a large amount of dividends. So we certainly believe that the streamlining, the efficiency of operations for all these state-owned companies is critical for any government, because it can really generate a lot of dividends to the state budget, which can then be used for any purpose, building infrastructure, building hospitals, building schools, or in an environment like this, to be used as subsidies to alleviate the effects of price hikes.
If, Marius, you can highlight 1, 2, or 3 things that potentially the Romanian government has achieved by establishing Fondul Proprietatea and then investing at the outset about 90 companies in it, what would those 1, 2, and 3 top objectives have been? Does better management, transparency, better governance figure in those?
I think at the very top would be streamlining these companies and making them profitable and a source of dividends to the state budget rather than a drag on the state budget. Because a lot of times state-owned companies that are mismanaged, that are loss-making, the government has to put additional funding to increase the share capital into these companies, which basically takes away money from other important projects for any country to subsidize these assets. This should never be the case. These companies should have a sustainable future, they should be efficient, they should be profitable, and they should be generating dividends and revenue for the government. So that's at the very top.
Okay.
The second benefit, I think, would be the improvement in the quality of the management and in the quality of the boards and the oversight of all these state-owned companies. This has been certainly the case in Romania. We've worked very closely with the government to write a corporate governance code to be applied in, when management teams and boards are selected for these state-owned companies. And I think the third objective, which has been partially achieved in Romania and we're working towards more, should be listing these assets on the stock exchange, because that takes care of the point that you brought up, Shamindra, the point about transparency. The moment that these assets are listed, there is full transparency because they have to publicize their financial statements, they have to put out annual reports, they have to be audited, so the taxpayers at any point in time know everything that's going on in these state-owned companies, because at the end of the day, the taxpayer owns all these assets, right? All the state-owned companies are owned individually by every Romanian or by every person in Sri Lanka.
If you can tell us what the shareholding structure of Fondul Proprietatea is currently. You did mention that it was listed in the Bucharest Stock Exchange and then subsequently listed in London. How much money have you raised through those listings? Have you raised any money through those listings, and what's the shareholding structure currently?
So the purpose of the listing specifically for Fondul was a bit different than the model that we are discussing, because back then the government was awarding shares to Romanian individuals as part of the compensation process, and the listing was a means to get the right market valuation on the fund, so that those individuals, who had been waiting for 25, 30 years for some kind of compensation from the government, were able to cash in, sell their shares at the prevailing market value. Because with Fondul specifically, there was a gray market before it was listed, in which some people were selling shares at a 90% discount to NAV, right? So at a very, very low valuation. The listing was a way to offer them the proper market valuation for the shares that they own.
So actually no money was raised through offerings to new shareholders during these processes of listing?
No, exactly, because the fund wasn't raising money at that point. But the way to look at it, the listing in a structure like this would allow the government to cash in and to raise a few $100 million with the listing. Because initially in a structure, if this structure were replicated in Sri Lanka, the government would own 100% of this vehicle initially. And then through the listing, they can sell 30 or 40% in the initial public offering and use those proceeds to reduce the debt, to fund the state budget basically. And then as time progresses, if the government decides to further reduce their holding into the fund, that's great, because it can offer them an additional way to raise money at any point in time.
Marius, here's a question that sort of dominates, or that is widely discussed in capital markets, and that is about what you call a conglomerate discount that sometimes comes with aggregation of businesses that necessarily aren't complementary or don't have much to do with each other. You've seen this with very large companies in big stock markets. How would you respond to that Fondul's business model is potentially one that can attract a discount on NAV because of the businesses that, the myriad businesses that are in it, and versus the approach of individually taking these companies public? What did Fondul achieve that couldn't have otherwise been achieved?
Yes, you are absolutely right. A lot of times these types of closed-end fund structure tend to trade at a discount. This was very much the case with Fondul, but we were focused on reducing that discount to the net asset value. So to give you an example, when we started, the discount put by the market on the fund was around 50-60%.
Right.
Fast forward 7-8 years later, we managed to reduce that discount down to zero, and the fund has had times in which it traded at a premium to its stated net asset value. So it falls upon the manager of the fund to be focused in reducing this discount to NAV. And there are, of course, certain tools that you can apply, and we've been successfully doing that by buying back our own shares, organizing tender offers. We've done 12 buyback programs. We are now completing tomorrow the 10th tender offer for the fund. So there are ways in which you can reduce this discount to NAV.
I'm not entirely sure what you mean by a tender offer. Can you clarify that?
A tender offer is when you buy back in a short period of time a large amount of stock. So for instance, if the fund is trading at a 10% discount to NAV and the fund has excess cash, it can go into the market and it can say, we are buying back, we're launching a tender offer to repurchase 5% of the number of shares, and we are paying X price, which can be something close to NAV, because it signals to the market that the discount is too high, and it is a very efficient way to reduce this discount to NAV. Now, the second part of your question regarding how does the shareholder structure look like?
Yes.
When we started in 2011, the government had 40% of the shares still into the fund. And then another 40% was owned by Romanian retail investors. About 10% was owned by institutional investors, foreign institutional investors, and the rest was owned by local institutional investors. Today, the shareholder structure looks completely different. The Romanian government owns only around 6% of the fund through the Ministry of Finance. We have 40% owned by the Romanian pension funds. So effectively, every Romanian contributor owns shares in Fondul and the underlying portfolio through their pension fund.
Sure.
These are privately managed pension funds, similar to how Fondul is managed by Franklin Templeton. These pension funds are managed by asset management firms. Then we have another 34%, which is owned by foreign institutional investors. We have been very active in promoting Fondul Romania and the underlying portfolio companies to global institutional investors. And we've attracted, I think, over time, more than $7 billion in investments from foreign institutional investors. And a lot of them, once they invested in Fondul initially, they started investing in other locally listed companies, be it the private oil company in the country, the telecom company. So we found the investors that we've attracted in Romania in a lot of other assets and IPOs that have taken place in the country ever since. So that's a very long-term benefit for the development of the local capital market, because a structure like this can be a way to attract institutional investors into the country. Because once they make money with the fund, it's a virtuous circle, because they tell their fixed income colleagues, the reforms that are happening in the country, that tends to have a positive impact on reducing the cost of debt for the country. So if there is this excitement building up about what's going on the ground in a country, it can really lead to a accelerated development of the local capital market. And I can tell you, as a Romanian, when we started marketing Fondul in the US or in Europe, I was very surprised about how negative the perception of the country was compared to the reality on the ground and what was happening in terms of the reforms and what we were doing in the state-owned companies. So it was my job and my colleagues' job to really explain and showcase what we're doing in Romania. We brought in a lot of investors on the ground through Capital Markets Day to see for themselves what's happening on the ground, because a lot of times if you're just reading the press or articles, there can be a lot of noise. So we try to offer a way to cut through that noise, to bring investors into the country, to have them meet with the government officials, to have them meet with the management teams of the state-owned companies, to show them the assets and how good these assets were and what the potential was for cash generation. And it's worked really well since.
Marius, Franklin Templeton took over the management of Fondul in 2010, you said. What is the remit that you have, and what are the measures of success that you are being held to account for? Is it net assets? Is it dividend yield? Is it stock market value? Better governance, and how do you measure that? What are the top 2 or 3 measures of success for Franklin Templeton's role in Fondul?
I think it's a mix of what you've mentioned, but what our shareholders expect from us is to deliver a higher NAV every year, so to increase the net asset value of the fund, higher share price. If there is a discount to NAV, there is an expectation from our investors that we reduce that discount to NAV significantly. So we've had objectives in our mandate to deliver both the discount reduction to keep it below 15%, and to have a higher NAV year on year. In addition to that, we hold ourselves to a very high standard in terms of wanting to maximize the shareholder returns. So that's why we pay a certain amount of dividends every year. So we want to offer our shareholders an attractive yield on the fund. We want to buy back shares because that offers additional returns and it reduces the volatility of the share price. And if I look at the last 10 years, I can say, proudly that we've achieved all these objectives because the share price has gone up 6 times, more than 6 times. The NAV has increased almost 3 times, and we've reduced the discount to NAV significantly, and we've distributed $4.2 billion in cash or through buybacks to our shareholders. So those are key measures of success. Of course, the last one you mentioned, corporate governance. We hold ourselves to a very high corporate governance standards because that's what we want and that's how we expect from the state-owned companies as well. We want these companies to be managed by the best possible people in the country, and we want the oversight of these companies through the board to come from the most experienced and independent people as well.
So your objectives are pretty much identical to those of any listed company, which is shareholder wealth maximization.
Absolutely.
As the most overriding one, right? Templeton has been managing Fondul for now 12 years. I'm sure it hasn't been all smooth all the way. If you thought there were 1 or 2 challenges, big challenges, that are top of mind for you as an executive overlooking a company that has a portfolio of 30 different businesses in it, what would those 1 or 2 challenges presently be?
You're absolutely right. I mean, despite the numbers that I gave you in terms of how much the share price has increased, how much the NAV has increased, we have had a tremendous amount of challenges over time, and we've worked very hard. as a team and with the support with the broader Franklin Templeton organization to overcome all these challenges. And there have been times when we've had to spend 13, 14 hours a day on the phone with shareholders because one of the largest assets entered a bankruptcy procedure. We've had very challenging regulations coming from the government, which would have threatened the reduction of the profitability of all the companies in our portfolio across the board. So we had to fight and try to change those regulations and to explain to the government the long-term damage that those types of regulations would do primarily to the state-owned companies. So the government would have been the biggest loser in those instances. I think right now we are in a very good position. The primary challenge that we are facing is the fact that we want to bring some of the assets on the stock market. We've been trying to do so for the last 5-6 years. And now finally we have the political support to do so. So we are working on the IPO of the largest asset in the fund, which is 70% of the NAV. It's the country's hydropower generation. We think this has the potential to become the most valuable company in both the state and private sector, given the attractiveness of these assets and the profitability. So now the challenge is making sure that we can achieve that and we can deliver a very successful IPO to our shareholders and to the Romanian government. Then the other challenge that we're facing is fiscal lack of predictability on the fiscal side, right? Because whenever there is pressure, governments tend to come up overnight with additional taxes or regulations. So what we are trying to do is to make sure that there is a proper consultation process with the stakeholders, because even though short term it may seem like a good idea, long term it can have very detrimental effects on the country. And I think, luckily, at least in Romania right now, we have a very constructive conversation with the current government. I think they understand the position of investors in the country, that overnight decisions don't bring anything good. But at the same time, we understand that there are pressure on the state budget, and we're trying to find solutions in how to alleviate those effects.
So if the one company that accounts for 70% of your net asset value in Fondul is to be listed, it looks like Fondul can potentially sunset at some point if it makes all these companies viable or sells them on.
I think if we deliver very strong returns, very successful IPOs, and return the cash to shareholders, we will have achieved our objective. But even with the IPO of the largest asset in the portfolio, we will be left with over $1 billion in assets. And of course, we certainly believe that there is a place in the Romanian capital market for a structure like Fondul for a very, very long time.
Now, I'm going back to something we discussed a little earlier. You said when Fondul was formed, net asset values of the companies therein at that time were $4 billion. There was a 60% market net asset value discount that was applied. Now, it seems that you had a good idea, at least at the time it was formed, what the net asset value of these assets were. Now, in Sri Lanka, for instance, companies don't use IFRS 1. State-owned companies don't use IFRS accounting, it's not always very easy to even have an NAV value. How was it over in Romania when Fondul started?
Romanian companies weren't using IFRS either at the time when we started managing the fund. So the way that these companies were valued by the government when they were injected into Fondul, they only looked at book value.
Right.
When we took over the management of the fund in 2010, the first thing that we did was to commission independent valuation reports for every single company in the portfolio. So these valuation reports were done by one of the big four companies. And that allowed us to have a much clearer picture on the valuation of the assets in the fund. We still, for the unlisted assets, we still use independent valuation reports, which are done by big four companies for the purpose of calculating the NAV. But of course, the method of valuation has evolved over time. We started with book value. Now we are, in a lot of times, a lot of companies, we're looking at peer comparison, so EV to EBITDA multiples compared to some listed peers, or we use DCF models to value, an asset like the airport of the Bucharest airport.
One last question, and that is, at the time of capitalization, at the time when the fund was formed, were there assets therein that appeared fundamentally unviable, that had significant negative net worth that you had to accommodate in the fund, and as a result, some may fear that these a few poor assets can sort of impact the entire viability of the exercise?
Absolutely. There were companies that were loss-making, although they had good assets, they were mismanaged, they had very high debt levels, and they were at a real risk of going into bankruptcy and subsequent liquidation. So we had to be proactive, get very deeply involved in these assets and try to turn them around. And the most prominent example is the company that is now 71% of the fund's NAV. At some point, this company was valued at zero because of high debt and how badly it was managed. So it's a huge success story. Of course, we also have the country's coal producer, electricity coal producer, which could have been a good story if it was turned around, but it hasn't been. So it is valued at zero still in our portfolio. So we have both examples, right? In a company where the government was supportive in working with us and trying to turn around an asset, we managed to make it, the most valuable company in Romania. In a company where there was a lot of resistance and, we just couldn't do what we thought is the right strategy, that company is valued at zero. And hopefully it will avoid a bankruptcy in the future.
Marius, this has been an enlightening conversation. Anything you think you need to add to round it off? Any critical areas that we've missed that you feel might be worth mentioning here?
I think from my perspective, and from our perspective as Franklin Templeton, the fact that we have a over 10-year track record with Fondul Proprietatea really puts us in a good position to try to replicate this model in a number of other countries. And look, in case of assets that are struggling, that are not performing very well, we are not afraid. We like challenges, and we like to take on this type of challenges and get deep into state-owned companies to help turn them around and put them on a sustainable path, because that, at the end of the day, offers long-term protection for the jobs, right? Because if a company, a state-owned company that is mismanaged, disappears, nobody wins from that. There's job destruction. There's a lot of negative effects that can come from that, and we certainly believe that if governments look to replicate this type of model, it can have a number of positive effects in the local economy, including the acceleration of the development of the capital market, which can be a critical pillar for economic development.
I have one last question, in fact. How is the fund manager compensated? Is there a fixed component to it, and are there performance-based measures of compensation? What would those be?
Yes. So we are compensated based on the market capitalization of the fund. So for a long time, we were receiving a base fee of 60 basis points of the value of the market capitalization. And there were some discount-related objectives. So if the discount to NAV was below 20%, the base fee was 65 basis points. If the discount to NAV was below 15%, the fee would go up to 70 basis points of the market cap. On top of that, we would receive 1% of the value of the buybacks, dividends, distributions that we make. So that's to further strengthen the alignment of interest between the manager and shareholders. With the latest mandate, which started at the beginning of April, we have a higher distribution fee, so we get 2.5% of the value of distributions. That's a way for shareholders to incentivize us to bring some of the largest assets to the market in an IPO, like Hidroelectrica, like the salt mines in the country, and a number of other assets. And that's been compensated with a decrease in the base fee.
This has been a fantastic interview, Marius. I thank you for your time.
Thank you very much, and appreciate the opportunity.